welcome to today's morning report chart appraisals on Friday the 7th of October with me, Richard Perry, market analyst at Antic Markets. Big news overnight has been this big flash crash on sterling. Let me show you the move on sterling that we saw. In the space of just a couple of minutes really, sterling fell from 126 to, well, traded low on Reuters at 118.19, but to be honest, the other platforms that I've been following suggest that maybe clients were getting filled at much lower levels than that. So it's a real sort of situation whereby they don't really know what the cause is at the moment. There's sort of a couple of theories flying around. You could argue that it just simply was a fat finger trade, or there's another possible scenario being that there was a large barrier option that traded and caused the sell-off in the light liquidity. So it's it's just not great for markets generally. I mean, sterling obviously has been significantly pounded, well, no pun intended, and the rebound has sort of started to settle around 124 area, and to be honest, it looks like that's well below the 126 area that you got just prior to the sell-off. So there is certainly some grounding behind a sell-off, so maybe a fat finger trade wasn't actually the cause behind it. So we're not going to know until sort of in the sort of hours or days coming up what the actual reason behind it was, but certainly there has been significant move and impact on the markets. So what we are seeing is the continued dollar strength really. This dollar strength has been sort of pulling in recent days, strongly high yesterday, again strongly high today. You're seeing the euro lower, and this euro is sort of now back towards 111.20, which is a key floor in the support. It is interesting that it's coming ahead of non-farm payrolls, because normally you see markets consolidating ahead of payrolls, but obviously you've got the dollar strength and also the concerns over sterling, so you are seeing a lot of movement in forex trades. So it is not looking all that positive for market sentiment at the moment. You've got the safe havens that are performing well, you've got gold that's holding up, you've got the yen, which is outperforming even the dollar just marginally. So really is a very sort of negative outlook that we're seeing on markets. Now, what you have seen, interestingly enough, is markets on equities is relatively holding. You've got the FTSE that's up, because when sterling is weak, FTSE is supported. So you're seeing FTSE outperforming today. But equity markets in the European trading, sort of DAX and CAC, are sort of lower. DAX actually rebounded from being quite strongly lower. And you've got to bear in mind that you've got non-farm payrolls today, and non-farm payrolls is clearly going to be the big focus as the market comes into the afternoon, but obviously the market is still sort of trying to settle following on from this sterling flash crash. Now, non-farm payrolls are expected to come, actually let me just show you the data, the events. Non-farm payrolls this afternoon, here we see 175 is the expectation, unemployment at 4.9, average earnings 0.2, and let me show you the charts of those. So 175 on non-farm payrolls would be in line with the 6-month moving average, interestingly enough. Unemployment rate has been at sort of 4.9% if the data comes through. Come on, data. Anyway, has been at 4.9% since the last couple of months, really. Now, watch out for the unemployment rate. If that starts to go down at the same time that the average hourly earnings are going up, and also the participation rate is going up, then that would be considered to be very hawkish. So that would be certainly a strong dollar environment, and yeah, it'll be interesting to see how risk plays out following on from this sterling flash crash and this sort of preference more for safer havens today. But it certainly looks as though a strong payroll support will be dollar strong, and the continuation of this dollar trend move that we've seen in recent days. So that's pretty much is the market today. I don't imagine the industrial production numbers from the UK are going to do a great deal. 1.3% is the expected year-on-year growth, though. So I wish you good luck in your trading today, and join me again for my FX Trader of the Year analysis. Thank you.